if you like Chargepoint, you're really gonna want to watch this video because this SPAC is much cheaper than Chargepoint, merging with a bigger provider of charging stations in Europe, and I'm really excited to talk to you about it. So stick around. Hey guys, welcome back to the channel. Thank you so much for joining me for another video. I'm Richard Allan. We talk about stocks on this channel, and you guys know, if you've been around my channel long enough, you know that I really like SBE/Chargepoint. I've talked about it a lot on this channel. It's a very exciting company to be a part of. But this other company just eked past me. I had no idea it even existed, that it was merging with a SPAC. I knew about the company, but I didn't know it was merging and going public because it was just announced last month. And forgive me, I can't know everything. Okay, forgive me, please. But seriously, I am really excited about this company. I'm gonna get the company out of the way right now. It's TPGY, okay? Let's just jump right into the chart, okay? Because when this SPAC was announced, look at this. December 1st, 4th, $10. And then this merger was announced and whoosh, went up to 25 bucks a share. Almost immediately within a week from there, went up to all-time highs of like $34 per share. And now it's down at 25 again. So, and I say down at 25 like that's nothing. But we're gonna go over an in-depth look at EVBox. Okay, that's the company they're merging with. Now, EVBox is owned by one of the largest energy providers in the entire world, ENGIE, E-N-G-I-E. I would encourage you to look them up. It's a French company, and they own, they'll retain about 40% of this company after the merger with TPGY. Now, the merger is slated for first quarter this year, so relatively soon. So I want to talk to you about EVBox. I want to talk to you about the potential that this company has. I think this is a great long-term hold, and we'll talk about why. We'll talk about the people behind it. And this was on my watch list over on my Discord and my Patreon just last week, and it jumped up like 10% on Friday. So this was one of my my companies that I put on my watch list on Thursday. If you're into that sort of thing, getting a watch list for me and trading updates, there's a link down in the description. I'd love to have you over there. Regarding this company, let's just jump right in to this article from Investor Place, because I feel like it gives a good rundown of what the company is, right? If you know SBE and Chargepoint, you know what EVBox does. For the most part, it's a very similar business. Now, they have almost double the number of chargers that Chargepoint has here in the US and Europe. So it's a big company. They have over 200,000 EV charging stations around Europe. So it's amazing what they're doing. Now, here it says EVBox is going public via a merger with special purpose acquisition company, TPGY. And TPG stock is soaring as a result. Now, this article says 18 things to know about TPG Pace, that's TPGY, and the EV SPAC merger. It says EVBox is a subsidiary of ENGIE, New Business SAS, which is a subsidiary of ENGIE SA. Again, that's that French company that is a massive business. ENGIE SA is a low-carbon energy services company with a focus on reducing carbon production around the world. EVBox fits into its goals as it's an electric vehicle charging company. Again, ENGIE will have a 40% ownership stake in EVBox when this all pans out, okay? It says the EV charging company is the largest in Europe and has a network of more than 190,000. They just surpassed 200,000 just very recently. Charge ports. TPG Pace or TPGY is a SPAC company created by the investment firm TPG. The company's goal was to find a high-growth company to merge with strong environmental, social, and governance principles. One benefit of the SPAC merger is that EVBox will get continued support from TPG, and we'll talk about TPG a little bit more in some of their investments and their track record when we get into the investor presentation here. The merger will have TPG Pace acquiring EVBox with a mix of cash and equity. That includes $225 million from the public investment in private equity, or PIPE, right? We're all familiar with that regarding SPACs. $100 million from TPG Pace's purchase agreement, and another $350 million in cash from its trust account. It's worth noting that $180 million of this will go to ENGIE as a cash payment. Again, ENGIE is going to have a 40% ownership stake of this company after it's all said and done. In total, EVBox is expected to have more than $425 million in gross proceeds to work with. Again, they're growing like crazy. And, you know, between the time this was published and the time that we are now, right, they added another 10,000 charge points. So this company is growing very, very fast, okay? It says the company plans to use these funds to expand its business. That includes growing its network in Europe and North America. Pretty sweet. The SPAC merger implies an enterprise value of $969 million for EVBox. When the transaction is complete, it will set a pro forma equity value of the company at $1.4 billion, essentially. The deal will also have TPG Pace changing its name to EVBox Group once it is complete, obviously. It will also result in TPGY stock changing to EVB. So a very simple, easy to remember ticker symbol. EVB will be the ticker symbol on the New York Stock Exchange. And the deal is set to close during the first quarter of 2021. So that's a major catalyst happening soon, right? Within the next 2 months, everything's set to close relatively soon. We know that the SBE Chargepoint merger is happening. The vote is happening on February 11th. So we should see everything switch over to CHPT that week. And it looks like this will happen within a month of that as well. So pretty exciting stuff. So let's jump right into the investor presentation here. TPG actually has a super great history of supporting high growth companies. These are some of the TPG investments: Airbnb, Hotwire, Uber, Spotify, C3AI. So C3AI actually works with ENGIE. And C3AI, if you can't tell by the name, is an artificial intelligence company working with major businesses to do some really, really cool stuff with efficiencies and stuff like that. So C3AI has done really, really well lately. Spotify, obviously, Uber, I mean, Airbnb, we know the story there. That just IPO'd and went freaking crazy. The point here is TPG has a great track record of picking some amazing high growth companies, and I don't think that they're getting it wrong with EVBox, right? I think that EVBox will be a contender along with Chargepoint and here in the US as well. I will link this investor presentation here in the description so you guys can read over this as well, but it's quite a long presentation. But the one thing I want to point out is in some of their research and some of the research that TPG did, it talks about here Europe is the epicenter of the EV transition. It says country level political and regulatory mandates provide strong support for growth. Annual EV sales in Europe will need to grow 19 times by 2030 to keep up with the current European CO2 mandates. Europe is very strict right now, like we've talked about, like the French Accord and stuff, right? So Europe is very strict with trying to curb climate change. They really, really are. It says European auto OEMs are publicly committed to systematically moving effectively all vehicle production to electric vehicles. It's amazing. Large corporations are actively investing to encourage employee electric vehicle ownership as they attempt to reduce their carbon footprints. Europe's corporate lease car structure is critical to driving employee adoption of electric vehicles. So again, Europe is the epicenter of the EV transition. It's happening quicker there than it is anywhere else in the world. Part of that is they don't have this addiction to, SUVs and big trucks and stuff like some of us do here in the US. I am not one of them. But Europe is definitely ahead of the game when it comes to the EV transition. So it's no wonder that EVBox has 200,000 charge points in Europe, okay? This next section is about investment highlights. It says that EVBox is a market leader with a defensible moat. Moat is essentially a competitive advantage, okay? They have competitive advantage over their competitors in Europe for sure. And I think they will, because of that, they'll probably be ahead of the game here in the US for the most part, except for Chargepoint probably, and some of the other larger ones like Blink. But I think they will for sure take take some of the market share from some of the smaller competitors, because they're going to have a ton of cash and they have such a large backing with a company like TPG and NG as well. So one of their competitive advantages here is an interoperable software platform delivered as a service enables customers to share in the monetization of their charging infrastructure. So pretty sweet. Robust industry tailwinds. Again, this is a massive industry. We've talked about it a bunch on this channel, but it's a growing industry in the hundreds of billions that are planned for production. And the Biden administration has promised to add 500,000 chargers or something crazy in the U.S. here, and I'm guessing that EVBox will be a part of that, and they might be stealing some of that market share from Chargepoint. And some of us that really love Chargepoint long term don't really like that, but competition is a good thing. It really is, because it'll drive prices down for us. It'll make both of these companies innovate and think a little bit differently. So competition is a good thing. It really is. The other thing to note, right, is that Chargepoint has a history of working well with other companies. They have all these roaming agreements with other companies here in the U.S. and Europe. So I don't foresee them having an issue with working well with EVBox. So this slide here, I want to go over this because it gives you an idea of the scale of the charging infrastructure in Europe. Okay, it gives you an idea, right? So we know that ChargePoint has 100 and some thousand charge points here. Okay, and EVBox has a couple 100,000 in Europe. Okay, so they have the leading European market share with 25% of public charging, of AC and DC public charging, 35% of that. So they have a couple 100,000 charge points, right? Where ChargePoint has 115, 120,000, something like that here in the US. And they have a 75% market share. Crazy difference, right? In the scale of this business in Europe versus the United States. Okay, so I hope you can appreciate the difference there. So EVBox they're no stranger to healthy competition. So I think they're going to jump into the market here in the US and do really well. So real quick, similar to ChargePoint, they have corporate and fleet solutions, commercial solutions, and residential solutions for charging as well. So that's something to note. So they'll be able to compete on every level with any of the competitors here in the US. Okay. One of the big things that they have is a reoccurring subscription type revenue as well, which is good. I mean, that's something that you want as a company. You want this reoccurring type revenue. So that's slated to grow quite a bit over the next 7 years. So that's absolutely amazing. It looks like in about 7 years, 55 to 60% of the revenue will be coming from this reoccurring, software type subscription revenue. Look at this page here. They already have agreements with all of these companies. Okay, so in the space of retail and hospitality and stuff like that, Hilton, so the Hilton hotels, McDonald's, Amazon, IKEA. So they already have massive agreements with those companies. All of these different automotive companies, Honda, IKEA, Fiat, Volkswagen, Ford. So you've got to think about this kind of stuff when you think about this company growing, especially here in the U.S., because they're going to be able to tap into some of these relationships that they've already built over the years with these companies. Avis. Where's Hertz? Hertz is not here. I'm just kidding. But different like parking and transportation companies. So they have some cool relationships with a lot of people, which I think is really exciting for this company from a growth standpoint. One thing to note here is that they are already certified to be in use here in the U.S., okay, in North America. And they have charging stations that are specifically developed for the U.S. market. They have some software that again is specifically developed for the U.S. market. They already have a dedicated sales and marketing team and a manufacturing facility in Illinois. That's something to point out. Guys, that's pretty much the gist of it, right? I'm excited for this company. It looks like we're going to be slated to be worth about $1.4 billion, but that's at a price of $10 per share. So we're already well above that. But we know that SBE is way, way above that price. They were slated at that $10 per share price of the SPAC to be worth about $2.5 billion, I believe, right? So, you know, we're looking at a company that is valued, the value proposition here for us as investors is a little better than SBE and Chargepoint. So if you like Chargepoint, I would challenge you to look at this company, because I really, really think it's a fantastic company to be a part of. I really, really do. And I think they have the backing with TPG and NG to do some fantastic things in the future and expand here in the US especially. I think there'll be a juggernaut in the space here in the US as well. Now, I think that will challenge Chargepoint to innovate and do better. And because right now, they don't have enough competition here in the US to be challenged. And I think good old-fashioned capitalism, good old-fashioned competition will help both of these companies excel here in the US. And that's my 2 cents on this company. So, but as always, let me know what you guys think. Let me know if I missed anything. I'm very, very excited about this company. And in terms of price, okay, I want to go over that real quick at the end here. I think we could easily see over the next few weeks a return to this you know, like $28 range. I think that is really, really good resistance level, that from here I think we could go with the momentum we had on Friday. Even though it was a bloody red day in the market, I think over the next couple weeks we're going to hit that $28 per share again. So, you know, this is a swing of a probably, you know, 15 to 20% for anybody that wants to jump into it. And I think I probably will over the next week or so. I'm going to see how tomorrow turns out for this. But I think I'm going to jump in over the next week or so, because I think we're going to be on an upswing here really, really soon, as more and more people get this on their radar and realize that this is a great opportunity. I think it really, really is. So thank you guys so much for joining me for another video. I appreciate you. As always, if you guys didn't sign up for WeBull yet, I have a WeBull link down in the description. All you have to do is create a new account, deposit $100, and you get 4 free stocks. I get a share of stock as well, so it helps me out as well. And if you're into seeing me trade and get live updates from me, and also a watch list like TPGY, you could have captured some of this profit potentially on Friday. I have a Patreon and a Discord down in the description as well. So thank you guys so much. As always, if you didn't already do it, click that beautiful red subscribe button down below, and I'll see you in the next video. Thanks.